Okay. We already broke the rules. 10 seconds in. Hi, everyone. Thank you so much for being here. Let's do a quick scan of the audience. Who is spending the majority of your time in crypto land nowadays? Nice.
Minority, looks like.
That's amazing. Who is kind of in tech generally and just mostly curious? OK, nice. That's good. So kind of adjacent audience, but not super crypto deep. This is awesome. Well, I'm very, very excited to be here with my friend Raj, who is one of the co-founders of Solana. The idea when we started thinking about organizing this panel is that I think at this point Solana has become a very prominent network and asset in the world. And there's the origin story of the idea of the network. And so normally, every conversation that I've seen with Raj is like, OK, so how did you meet Tolly? And then immediately just goes into two coffees and a beer, and then the network, and so on. And I've been searching a little bit like, OK, so what's Raj's origin story? How did you go into the dark side? Where did you grow up? And so I thought it would be a great opportunity to start asking a lot of the questions that I've not seen so far, been asking any of the interviews. And so let's dive in. We're going to have space for questions towards the end of the session. And so we'd encourage you to use the app to send them our way. And we'll, maybe weave them in, or maybe just save them for the later part. But yeah, I'm very, very excited to be here with you today.
Yeah, thanks for having me, and thanks everybody for coming.
So where did you grow up? Let's start from the beginning.
I grew up in Valdosta, Georgia. It's like, whenever I tell people I'm from Georgia, they say, oh, you're from Atlanta. And it's like just the opposite of Atlanta is where I'm at in Georgia growing up. So like pretty close to Florida.
Nice. Brothers, sisters, lonely child?
One older brother, one older sister.
Nice.
Much older, 8 and 10 years older. Yep.
And eventually you made your way to Philly.
Yep, I went to UPenn, studied finance, did some computer science and design classes too, but I was in business school for college. And you started going down the finance track, a little bit of hedge fund work, a little bit of venture work for a bit, but then eventually you went into health, like digital health. Yeah, so I think there's actually a lot of people that went from health tech in the 2008 to 2015 time period into crypto. And if you look at Balaji Srinivasan, he started a genetic prenatal testing company, and then became CTO of Coinbase. There's the people from Multicoin all did health tech startups, and I think the theme that sticks out to me is that if you look at that cohort of people, I think they were all inspired. I know I was inspired by Uber and Airbnb, these companies that built marketplace platforms in highly regulated industries, and they basically blitzscaled so fast with a cascade of consumer preferences. It's OK now to ride in a stranger's car. It's OK now to rent out your apartment. Those preferences happened very quickly, and then regulation had to catch up. These companies diversified their regulatory risk so quickly that you couldn't kill the company. So I think in 2000, I'll call it 2010 to 2015, what you saw was Fitbits became a thing. Everybody had a supercomputer in their pocket. There were all kinds of wearables and connected devices to get all this health data. And now we see things like 8 Sleep and continuous glucose monitors. That was the first company that I started, was a continuous glucose monitor. The idea was if we can unlock the information in our bloodstreams, can we rebuild health based on that data in a way that nobody can stop, because the consumer preferences, the demand, and the value is just so precipitous. I think what we all found, when I talk to anybody now that was in health tech at that time, what we all feel like is back then it was like sprinting through quicksand, because if health insurance companies didn't pay for what you were building, or if the FDA didn't approve, you just would get killed. And in crypto, it feels like sprinting and just, you've got the wind at your back. These protocols can't be stopped. It doesn't really matter what regulators think. Consumer preferences continue to cascade, even though it's a really, cyclical thing. Generally, adoption is up and to the right. So I think the common theme there, and sorry to rant, but I was like thinking about this going on.
We'll get to crypto, don't worry.
I think the common theme there is like, we worked on consumerization of healthcare, where if the patient makes the decision, they decide what products they're going to use, they decide how they're going to operate their healthcare, then the regulation would have to follow. That didn't really happen, right?
Yep.
It was too big and too powerful and too regulated. Now, I think the idea is crypto is the consumerization of finance.
Yep.
So individuals make their own decisions about where to allocate their wealth and and what to do with their digital assets. And the good news is it's unstoppable. I think it's going to just continue to proliferate. The bad and weird news is it's a roller coaster and a circus and a clown show, like all combined. It's like, it just looks very weird. So yeah, it's been cool to be a part of, though, because it doesn't feel like sprinting in quicksand anymore. It feels like really running.
Because you were doing that company for a couple of years, and that was also your transition from the East Coast to the West Coast.
Yeah. So starting my first company, I got into an incubator called Rock Health, and this is like. I think I learned so much about what early stage startup communities look like. It was just like, two people in a dream and a pitch deck and a very small community of mentors that help them not make rookie mistakes. And then when we moved to San Francisco, we had $20,000 in grant money, and that was it. Like, that's all we had for two of us, to like pay for rent and food and everything. And that was enough, just for us to feel like we had validation to get something off the ground. But the other thing that I saw was, as soon as we got into town, everyone who had built a health tech business over the last like 20 years was, their Rolodex was open, their phone line was open, they would go out to lunch, they would tell us their whole story. And so there was this whole community of people that just wanted to see you succeed. That's something I'm really passionate about now, is figuring out how to make those types of startup ecosystems develop and thrive.
Because at that time, you got started General Catalyst in Boston, right?
Yeah.
And so it was a transition not just from East Coast, but like Boston tech ecosystem, when just moving to the West Coast was a big thing, right? It was like around the time, not too far after Facebook had moved, and that transition was still happening. Yeah,
there was, so General Catalyst, the venture firm that I was at, had just started their West Coast office. So it was kind of this like bold new idea that East Coast tech, elite money, and founder ecosystems could transplant their brand over into Silicon Valley, and it was just validated enough that like that was a good idea and that that was worth doing. Now I think most people think of General Catalyst as like one of the great West Coast venture brands. So there was definitely like that was a hot time for San Francisco tech.
And that company got sunsetted, and then you spent a little bit of time doing EIR, doing investing, doing advising, trying to do things. What was that period like?
There were two periods like that, and I think one thing that I always did was, when I quit something, I didn't just go look for another job or like immediately know what company I was starting next. I always took as much time as my savings account would allow me, and I was willing to go down to like 3 months of runway to just figure out where, because I had already done it once, right? Like $20K to go to San Francisco lasted like 3 months, and that was enough, right? We found the idea, we recruited the right people, we raised the money, so that's enough time. So I was always willing to run down the clock. And so 2 times that happened. Once was after leaving Sano, my first company. mostly was, it was pretty short. I was an entrepreneur in residence at Rock Health, doing office hours. And I think venture and incubator is like playing that mentor role. I always just think of it as like the vantage point of a hawk. Like you can see everything, you can pattern match really quickly, and you can then orient where you want to dive into and where you want to attack. And I think what I found was the first time that like the hardware was just getting more and more commoditized, and it was the platforms that you build on top that were going to be really valuable. So I joined a company really early on called Omada Health. Yeah. That was not innovating on the hardware. It was more like connected scales and pedometers and remote health coaches, but selling into health insurance plans and doing a real sort of data-driven product to target patients that were on the verge of getting diabetes, they're pre-diabetic, or they're on the verge of developing cardiovascular disease, and really targeting a weight loss program at them. And so over the next 3 or 4 years, I think the main focus there was just actually building that product to be super data driven and effectively have like randomized controlled trials for interventions to prove clinical outcomes, which is extremely, like there's a lot of precision there. And there's the second time that I was kind of searching and experimenting was after that. My goal in the year after leaving Omada in 2015 was to take everything I'd learned from building a 0 to 12 person or 20 person company, building a 20 person to 200 person company, and go into still find that wedge. Where is there a product that's in a regulatory sort of gray area where you could blitz scale quickly? And I was pretty close to starting like an AI therapist company. That was going to be the thing. And now you see it's like Grok has like a therapist tab on it. People are building real relationships with AIs. But that was when I met Toli, and that's a whole other story.
So for most of the people in the audience, like we were part of the seed investors into Solana. And it's always fun every once in a while to go back and look at the documents and how we evaluated the opportunity. And in advance of this conversation, I looked at some of the reference calls that we did with the co-founders of Omada, and like you can start seeing some of the seeds there. So I'll read some of the quotes. This is from one of the co-founders of Omada. Raj is very intelligent, extremely hardworking. He was there when we left the office. He was working on various problems, puts in the time, takes a lot of initiative, drives to bring projects into conclusions for outcomes, not afraid to challenge the norms. But I think the best role for him is as an entrepreneur and guiding the company forward because his weaknesses is that he doesn't believe in change management, and sometimes the organization is not ready to move fast enough, and so he often pushes harder than what we feel like it's ready to go. But on his own, when he's driving company culture, he's actually going to be excellent at that. And I think that would be the best path forward for him.
Yeah, basically I'm super impatient.
Exactly.
Like if change is possible, you just have to do it. Otherwise, somebody else will, and they will outcompete you. That's kind of the way I view things. So, yeah, I mean, I think people often ask like how I deal with the pace of crypto, and just think, one day it's going to take over the world, and one day it's going to die. It's like this is perfect for me. This is the pace I like to move at. So,
that's good. Before you met Toli, were you already tinkering with crypto? What is your kind of Bitcoin or Ethereum
So I knew about Ethereum. I'd played with it. We'd had hackathons where we launched tokens, launched smart contracts, like understood the concept. But the fear that I had was, if you think back to the chapter before crypto for me, it was like going way too technical and way too innovative in something that was not ready for prime time, which was glucose sensors, and being way too early, and then going way too commoditized and sort of incremental, which was Omada. And I didn't want to end up getting into crypto too early if it was going to be another 20 years, 30 years before the infrastructure was ready, before it was scalable, before it's consumer grade, before consumer preferences cascade and people are actually, willing to adopt these things, before developers find business models for, making use of it. And it just felt so like way too early. Like there's no way this is gonna reach mainstream in the next like 5 years. So it was more of like a watch and wait and see thing, which is why when I met Toli, and he just had this like current running through him. He's like, scalability is the absolute biggest problem here. I know how to solve it. Nobody else in the industry seems to understand how to solve it the way I do, and I can't force myself to do anything else other than put all my time towards this. Basically, I switched gears and said, instead of focusing on a theme of rebuilding healthcare in the way that I want, what if I focus on people? Just like, who's the best person that I know in the world that is really relentlessly focused on the biggest problem that I can find in the world? And the answer to that was like, Toli working on scalability in blockchain is like a once in a generation opportunity. You just don't find people like that at that time in their career and their life. And when he left Dropbox, where he had a pretty cushy job, he was leading compression there, and he was working on really hard, interesting technical problems after decades of doing the same thing at Qualcomm, and he knew nothing about building startups. So my commitment was like, I'll give this guy 6 months of my prime years and like all my time and effort to just help him get off the ground and not fall on his face, because that would be really sad if somebody who can do it, who has the skill set, has the network, has the experience and the design, just like picks the wrong VP of engineering, or takes on the wrong investors, or what all the dumb things that kill companies in the first year. I just wanted to make sure none of those things killed the idea. And then in the course of helping him, I just fell in love with crypto, because I kind of realized what resonated about that potential for the industry for me, which is this idea of highly regulated industries getting rebuilt as consumer first.
How did you guys meet?
We first met camping in Point Reyes through the guy that led data science at Omada that I worked really closely with.
Nice.
He was a particle physicist and like the smartest technologist I knew, and we paired really well for years at Omada, and he was friends with Toli from way back in San Diego. So,
wow.
Yeah, if you ask Toli, he doesn't remember meeting me on that campus. But he made an impact on me, and I kept him in mind. And then later, Eric, the same guy, was just like, you've got to talk to Toli. He's got the technical part figured out. He needs everything else.
Nice.
Yep.
And so then, at what point did you guys start actually collaborating full time and so on? I remember we met you in the spring of 2018.
Yeah.
So I think at that point, you guys had been working together for a little bit, and I think there was 4 or 5 of you. I think Greg was already full time, and but what was the first couple of months like?
Yeah, Toli finished the most bare bones version of the white paper in I think November of 2017, and then and quit his job around the same time. Yeah. And pretty quickly afterward, I think by like January, that was when I had said, I'm going to do this full time. I'm not going to focus on anything else. By April, we had started to get interest in a seed round, and as we started to close, that was when Greg and Steven and a few others who had families and a lot of opportunity cost quit their jobs and went full time. So that winter of 2017-18 to spring of 2018, everything really started moving quickly.
Yep. I wanted to take a minute to put us back into what it was, the landscape of Bitcoin and Ethereum, because it was one of those ideas that for a lot of, at least on the venture side, a lot of my peers that were in crypto and that I consider to be way smarter than me, it was like, this is game over already, right? And it was, Bitcoin had been around probably 8-ish years at that point. Ethereum had been running for like 3-ish or 4 years at the time. And at the time, the narrative was that the network effects of developers around the Ethereum virtual machine were basically so strong that it was just not worth even giving it a try, and that the scalability would come through putting layers on top of the network, right? And for us at Foundation, we had this idea of like, well, if you start working back from like, if you want a billion user to be running on transactions on top of these networks, neither Bitcoin or Ethereum are going to scale, so you need to try a different architecture. The problem is that nobody had demonstrated that you could bootstrap a network while keeping the security guarantees that Bitcoin and Ethereum provide, and just do it but then you had to believe that a completely different architecture would solve the blockchain trilemma, which now is proven to not even be a real thing anymore at some level. But that was pretty difficult at the time, right? And to be honest, like the Loom team at the time was not the most talented fundraising team at the time, right?
Yeah.
How was that kind of like first contact with investors? Like, you guys had some interest from angels and friends and family, but I remember that it took a lot of work to put together that initial, I think it was like a $2 million round, or
Yeah.
2.5.
Yeah, it was pretty tough. I think what we found was just that the industry was like in a trance, and it was kind of in denial. Like most investors were following what most engineers were saying, and most engineers were saying that Ethereum was going to win. But then when you talk to consumers who tried to use Ethereum, they just thought it was completely unusable, and there wasn't really a clear path to how to solve that. So what we had to do was find, investors who were serious enough about crypto, but first principled enough to ask these questions and, imagine a world where Ethereum didn't win everything and it wasn't going to take, 10 or 15 years to scale it. But who also, that most of the investors that we ended up bringing on were not like in the Ethereum ICO. They weren't people who just had really heavy, Ethereum bags. And so, yeah, I think the hardest part was you're getting into crypto, you're building a layer one. The obvious path should be that you look for people that have been successful layer one investors. But that's when we learned how religious crypto was, and still is, right? It's like people will just completely, ignore reality if their investments, are predicated on a different reality. So, yeah, I mean, I think you guys, Multicoin, Slow Ventures, a bunch of others in the seed were like, at that right time, and that's why I always give advice to new founders. Everybody says, I won't name the names, but there's just like 5 investors that, if you get them, then everything else is going to work out perfectly. And it's like those investors have made their brand, a funnel for founders to think they have to take their money. But the most important decision and kind of process that I advise founders on is to find the investor whose fate depends on the investment. It's never going to depend quite as much as your fate, but like you can find people who really they have to prove themselves with this investment. They have to make this one work. They have to, they're taking risk with it. They're not, super diversified. And I think, in a way, the difficulty of the fundraise in spring of 2018 was actually perfect because it filtered for only the investors that had the highest conviction and were the most first principles thinkers. And all of them followed on. I remember in the next round that we did later that year,
like 6 months later, I believe.
It was pretty quick because it was so fast that we built out, the initial testnet and we started to prove the performance. And there was demand. People started to try and preempt us. And I remember getting a phone call, I think from Sam Lesson, and I was still just super paranoid. I thought like, that maybe he was going to be upset that there was another round happening so quickly, or you know, or I don't know what it was, but I picked up the phone and I was like, oh man, is he gonna like ask for his money back? What's gonna happen here? And he, you know, the answer was he was ready to double down. Right? Everybody from the first round was like instantly ready to double down as soon as we saw that initial validation, and that happened like basically every round afterwards. So I think a lesson for today that is that I think about is like crypto is still right now. I think of it as in like a slump. It's in a sentiment slump. A lot of engagement metrics are down relative to like 6 months ago. They're still way up from, you know, a year or two ago, but it's not like sexy to be, you know, building in crypto right now. And a lot of investors are really skittish. And I think that's actually the perfect time, you know, because in that kind of crucible moment, you end up selecting for exactly the right people. So I wouldn't go back and do it another way. I'm happy that we were kind of cash starved and had to really fight for people to support us.
Yeah. I wanna touch on that because at the time I remember there were already some big rounds kind of coming online for projects. Basically, you could divide at that time already. It was not as clear, but like you could start dividing the world between new architectures, but mostly Ethereum compatible, right? Like EVM driven, and then I think only you guys and Algorand were kind of the two other architectures that were kind of like not caving into being EVM first, not necessarily having a mempool to queue transactions and all of that stuff. And the big rounds were happening in EVM land, and then Algorand was able to fundraise because Silvio Micali is just a legend in cryptography.
Yeah, we kept hearing he has a Turing Award, so
exactly.
Obviously his network is going to win. And I was like, I've never thought of awards as what determines success.
We also invested in that because it was like the logical conclusion of our thesis was to invest in both of those on both of the projects. But then a dramatic difference in how you guys started building the project and the community started emerging. And that didn't really become obvious to the outside world until maybe a couple of years later. But you guys went community first, driving for kind of like internal cohesion and driving to build up the ecosystem in a way that now has emerged as probably the most vibrant ecosystem in crypto 5 years later. But at the time, it was not obvious. And my perception of how Algorand went was, let's just go heavy enterprise. Let's go BD kind of approach. And I remember having multiple conversations with you around, okay, like what are we doing with that? And you've always had like a certain set of answers that are pretty powerful. But ultimately, it sounds that early on, you guys decided to go for building the ecosystem, and even if it was few believers, go deep with them and filter out everybody else, and that the rest of the growth would come.
Yeah, and I think there's two layers of the community. There's developers and there's users, and I think this goes back to like what does crypto unlock? What was it made for? If we think back to the consumerization of finance, if that's one part of the crypto mission, well, the consumers matter, right? Like it's not, if you start building for enterprises that somewhere downstream have consumers, you're slowing down your feedback loop of like the most powerful part of this new primitive, which is individuals have an ability to cryptographically signed transactions, and that's getting easier and easier and faster and cheaper and cheaper. If you looked at what it took for anybody who was worthy of cryptographically signing something in the 1990s to cryptographically sign something, it was like a big deal. Like teams of people had to meet together to make these things happen for like a large corporation to do signing. Now it's in everyone's hands all the time. So if you're gonna really squeeze as much as you can out of that new primitive, why operate through more middlemen, more exchanges, more enterprises, more decision makers who are gonna push this technology down people's throats? Just go directly to them. So I think the community of developers have a common belief that the fastest, cheapest, and most fun base layer is going to be the one that allows them to deliver those experiences that consumers actually want. And they've seen that in Solana. We prioritize that all the time. Like, we want the end user experience to be as fast, frictionless, and cheap and fun as possible. So yeah, I think like when we had competitors with $200 million funding rounds that were building, we would go to conferences and see, I mean, it would be like me and Toli, nobody knew who we were, nobody cared, and then there would be 20 BD people with like gray hair and suits, and they'd all run IPOs and they'd been VP of this and that, and we were just like, okay, like that, we left that. That's not what we came here to do. We came here to build something that's fun for end users. So I think we were always willing to be wrong. Like, if it ended up happening that crypto was really this great tool for enterprises, and that's where all the adoption would come from, or that its end users are not meant to interact directly with the protocols the way they interact with email and internet protocols. It's this new set of protocols that it turns out are just for JP Morgan to use, and they'll be your interface to that. We would have been happy to have been wrong and tried as hard as we could for like 10, 20 years to make the alternate reality happen. It turns out, I think we were right, but also it's super weird. Like meme coins and NFTs and the things that people want to do at this stage with what we know to be a very powerful technology are pretty weird. But to us, that's not like...
Can we talk about Degenerate Ape Academy? Because
Sure.
I think to me that was like the first moment where it's like, there's some unique activity here.
Yeah. So when we started Solana, there was no such thing as DeFi, decentralized finance for borrowing, lending, trading. There was no such thing as NFT collectibles or IP that you publish on chain and that people go and collect. There was an idea that there would be something like decentralized trading of assets, but we were really surprised in 2021 that after lots of founders had built tons of DeFi infrastructure, the first thing that went truly viral was these ape photo NFT project. And there had been some of that on Ethereum, but in Ethereum land, these things were being positioned as like luxury goods. Like it would be a really, a big flex, like owning a Lamborghini, to have a Bored Ape, Academy Ape that's like $200,000. And on Solana, what we saw was the art quality was like way different. It was like Pixar level character designs, but also they were cheap. They were like $8. And we saw it sort of emerge on Twitter that like the most popular thing on the network was this launch that was about to happen, and it basically like broke the internet. The Discord server like broke. There was 200,000 people all trying to get at this one asset at the same time. And literally the way the chain works, it's like there was an auction where the first asset that got bought was always going to be the first asset. It's literally one asset, like one piece of memory that 200,000 people are all lining up to go be first to get. And that was just a stress test for the network that like we never would have imagined. We never thought that people would all be trying to get like the same dollar bill is the equivalent, right? They're not trying to get dollars that are fungible. They're trying to get the same one asset. So this is another thing that I think you get from having consumers, a direct relationship with consumers, is you learn the weird ways that you don't expect that they're going to stress test the network when they have unfettered access, and you can respond to those things more quickly. What we found every other competitor doing in the market was they would see that something was working on Solana, they would see us break and then fix those bottlenecks, and then they would try and go ahead and seed the same activity on their network. But in that way, they never build a brand of being actually like pioneering in how consumer preferences make use of blockchains, right? So I think like that's something that I'm pretty proud about with the brand, is that it's, for developers and for consumers, it's where stuff happens first now.
It was a roller coaster from there, right? Because, okay, the network It's actually, we were talking about it backstage. Like, we're about to hit the 5-year anniversary from network launch.
Mainnet launch, yeah.
How was that time? Because this is COVID time. I think it was like the big drop in the stock market had just happened. I remember talking to other investors, questioning like whether this would be the right time to launch or whether we should wait for a better timing. And you guys were like, it is what it is. We're just going to go.
Yeah, we YOLO'd. It was March 2020. We had just gone out to Asia to try and get another like 18 months of runway through a fundraise. We failed. We came back with $0. So we only had like 9 months of runway, and we felt the network was ready to launch. We had gotten everything lined up: the exchange listings, the auction, price discovery, market makers. Everything's lined up for like one. It's like a rocket launch. It has to happen on that day, or you cancel. And then like Black Thursday happens. It's like the biggest stock market, drop in since the Depression. And every investor is calling us and every portfolio company saying like, this is it. It's going to be years. You need to batten down the hatches. Like cancel anything that costs money. Lay people off. Do furloughs. Like focus on survival. And I think we didn't really have much of a choice. We couldn't delay for years. We had to either launch or delay for max 9 months. And sometimes when I tell this story, I romanticize how bold we were about about doing the hard thing and launching. But the reality is like we didn't think anything was going to be any better in 9 months. So we just had to.
Might as well just
we just had to launch. But I think the other part was. Balaji was pretty prophetic at that time, and he was, he and a few others were talking about how, the lockdowns were going to cause a big disruption in the global economy, and one of the reasons crypto exists is because there's no, programmatic constraints on the printing of money, and the only way that we're going to get through this big hole in the economy over the next few years is rampant printing of money, yep. And so. Again, we asked ourselves like, is this going to be a period that proves crypto's value more, or is it going to be something that kills crypto? If it kills crypto, crypto never had any value to begin with. Like, yeah. It shouldn't exist, and so we should just learn that and go get jobs. Like, we should learn that quickly and go back to our old jobs. So that this is another thing. It's just like we always genuinely were willing to fail. If you've actually put up your hardest question and get an answer back that you don't want, that kills your company, like great, you can go do something else. and so I think that's always been a freeing way that we've that we've sort of looked into the abyss and just jumped in.
And around that time, you guys. One of the things that I appreciate the most about both you and Toli is that you go against the conventional wisdom. It's like in crypto, sometimes the behavior is pretty groupthink oriented, or this is the way that other projects have done, and so it becomes a default. And I remember at that time, you guys made a couple of interesting decisions. One was, it was pretty standard at that point that there were kind of monthly unlocks for insiders to be able to participate and get liquidity from the tokens that were launched. And you guys decided, we're just going to unlock everybody at the same time. And I remember was like, that's very different. Like, walk me through the logic. And you guys were like, well, I mean, if people are going to sell, they're going to sell. So might as well just do it all at once and rip the Band-Aid. And if not, it'll be fine. And there was a lot of fear leading up to that unlock, but then it was totally fine because everybody, was okay with the way that it had done versus having that constant sales pressure. And then the other one that has always stuck with me was that whether it was the market circumstances at the time, when you guys launched the network, it was like a $3 price, something like that, relative to where the network is today. And the only reason why that's relevant is because you have, given a lot of people a pretty unique opportunity to participate in the ecosystem, build it, and then get rewarded for being along the ride. And I'm pretty sure that there might be a couple of OGs here that probably participated in buying their portion of the tokens at a very low price at different moments within the network and have ridden the roller coaster now. And for us as investors, we see a lot of projects and a lot of networks, especially since our investment with you guys. And it has become kind of like the opposite, where like people are listing at just crazy valuations. And the initial experience for people is that they probably buy in because they're enthusiastic, but then economically, they don't get compensated for contributing to the network. And for you guys, it has been just like this, you buy into the community, trial by fire, and a lot of the people are still around, and they never really left.
Yeah.
That has been amazing.
Yeah, I mean, again, it was partially like the markets do what they're going to do. We don't have any control over price, and we never really tried to. But I think, we always felt like Bitcoin and Ethereum wouldn't have been as successful if they weren't like a secret to begin with. That you had to sift through a lot of technical understanding of complex concepts, and there was no marketing really for those things. They weren't trying to maximize their value from day one. What they were trying to do was prove a new technical concept, and they happened to attract people who really cared about those technical concepts. And then those people turn out to be actually pretty like long-term thinkers, and that ends up being really foundational and a source of strength later if those assets and networks hit a rough patch. So to us, that felt logical. It felt illogical what had happened by that point in crypto, which was a white paper can get you like $200 million and $1 billion valuation, and then you go out to market with that, and the VCs make a lot of money, but now you have to become $1 trillion project for anyone to make 1,000x. And so yeah, I think again we had no control over these things, but we were like pretty happy to be building and continuing to prove out the core concept, and just communicate in very sterile ways about the progress, so that the people who were paying attention, it tended to sort of filter for long-term thinkers that actually cared about what we were building. Which is why like we didn't do any marketing up front. We didn't have a Telegram group that was talking about the token launch or anything. It was just talking about technical decisions that were being made to optimize for speed. Yep. And so the people who could look in there and were excited about what was happening were like our future validators who now run all these big profitable businesses, getting delegation and staking on behalf of others in the network. It was like early developers who knew they had a vision for a product that could use crypto, but they just were never able to deliver it on legacy networks. Now they're some of the biggest product builders in Solana. And investors like you guys that are just like, I think I remember Steve talking about how one of the stories of how like Netflix almost died, and you guys were just very cool-handed through that, and I think that kind of experience shows that you're long-term focused. You're willing to also go through those really dark moments with founders.
Yeah. And then, but one of the things that you have not compromised on is building the ecosystem, and I think one obviously, totally has a big presence, and he's the reply guy along with Mert now, but you've had a hand in a lot of things in a way that it hasn't been as visible to the more casual observers or the people that are not kind of like embedded with you within the office and so on. There are certain things, like for example, I remember Solana never built their own wallet, right? Like it was somebody else built it. Like you guys have not compromised in terms of not letting the community or having that ecosystem being the ones that push forward whatever happens. And culturally, going back to the references from Omada and so on, I believe that you've had a pretty important role in actually enforcing that and picking the right people and pushing people in and out of the organization, and just not compromising on some of the elements of the vision. And for example, one of the things that I remember from one of our investor update sessions was that you threw the quote around, we want to be the first $1 trillion market cap company or asset with less than 100 people in the payroll. And at the time, it was pre-launch, and so we were all kind of like, ha, that sounds awesome. But now you actually have a real shot.
Yeah, we're a good way there, actually.
Yeah.
But actually, what I said was that we wanted to help enable the creation of $1 trillion in value with less than 100 people, which I think we've already done. That's happened. But I think what you're getting at is there was always we started with 25. Like the hard cap for people, for team size was supposed to be 25. I think it was in 2021 with the giant influx in users, all the outages, like network failures, where we had no choice but to hire more. But there was always this, I mean, as we got closer to whatever limit we had said, it was 25, then it was 50, then it was 100, I was, indicating to people that if we're going to go over that, you're going to have to get rid of some people to stay under the cap. And I think like most companies that are in high growth mode don't really ever pose that question. It's like once you're in growth mode, you're in growth mode. If we hire the wrong people, we'll figure it out later. We'll do layoffs or something, right? I think with every hire, we always had sort of this looming question of like, if they're the one that we add that later on it turns out gets us to 101, are they going to be the last person that we let go to stay under that 100? It just gives you this kind of insane bar for quality that I think
hard choices.
Yeah, it's just to me, having been through building a few dozen person company and then like getting through rocket ships where it got above 200, 250 people, you really like lose your soul in that phase. It's really easy to lose your soul, and I think the benefit that we have of building a crypto project and an open protocol is like we don't have to build everything. It's actually better. It's more competitive. It's you iterate faster against user needs if you have multiple teams doing the things that are not critically essential for the layer one to be doing. So now it's very crisp. We know what we're focusing on. It's increasing bandwidth and reducing latency. Like that's going to be the 50-year mission. And I think we can absolutely do the majority of that work with less than 100 people. And I think $1 trillion of value definitely has been created over Solana's life. I mean, I think there's a path to us actually reducing in size over time, and the cool way that's been happening is there's just more founders than I can count that have now started multiple billion-dollar companies that were in our first 100 people. So when they leave, we don't backfill those. We're like, okay, you can go build a valuable part of this ecosystem, and now we don't have to do that anymore.
Yeah. That is such a unique concept as well that you don't see. Like a lot of companies are very protective of the people, and then like, yeah, we want to support you as an entrepreneur and so on, but it's like sometimes half-hearted, and you guys are the opposite. It's like, oh, you found a project, like just start a company around it, and just we'll help you, but like just go out into the world.
Yeah, I mean, when I left General Catalyst to start a company, I thought I was going to be in trouble, and they gave me an exit bonus. So I lied earlier. When I said we had $20,000, I also had $10,000 from General Catalyst. They were like, here's a bonus to go like be a founder. And they helped me and helped us hone the pitch. So and that was that defined the rest of my career. So I think the idea that somebody, first of all, if somebody from my teams is going to found any business, it doesn't have to be in crypto. I'm just happy. Like we got to be a part of the story for somebody to go take that leap, which is very difficult. The crazy, twilight zone I'm in is like these people aren't even leaving the industry. They're not even leaving the ecosystem. They're building on the network, which is just we're founder constrained. The thing we need the most is passionate, experienced, and talented founders. So yeah, it's really easy to support them. We invest in them. We help them raise their rounds. We help them build their founding teams. Like, it's a no-brainer.
So, by the way, for folks that don't know this, Raj is a recent transplant into the Austin ecosystem, and so now joins the Multicoin team, the Jito team, and a couple of others, including myself, as Austin locals. So we're pretty excited to be building more of the Solana community here. And
yeah, I live here now. It's awesome.
Yeah, it's amazing.
Yeah.
So how are you spending your days now that you guys are famous? And there was a recent situation where Solana was the underdog for a long time, right? And we were always talked down by the primarily Ethereum community and the Bitcoin community. And recently, when Ethereum has had its recent share of existential questions and so on, you went and tweeted something, and then that didn't land in the same way that it used to land anymore.
So basically, it used to be okay for us to criticize, Ethereum, and overnight it became very not okay, and I learned that through a tweet recently. And Jill Gunter said, what Raj just learned is that Solana isn't punching up anymore; it's punching down. And I don't think that's exactly true, but I think the vibe has definitely shifted. And yeah, I mean, when we first launched, I really hated this idea of crypto tribalism, but I think I actually got sucked into it because this is where Mert came from. Mert is like he's a person in the community that has built an indexing company, and they help developers, in a lot of different ways. And he's on Twitter 24/7, like an attack dog. Like when people spread misinformation about Solana, he's just like giving them multiple page, answers. And at the end, he just insults them like deeply, personally. So like I didn't ever want to do that, and I didn't want that to be part of the culture because we came into crypto and it was so tribal and it was holding itself back in that way. But I think the community developed its own immune response, and that's, I think, done well for us. Because just like correcting misinformation is table stakes. I think that's worth doing. But yeah, I think we're at a stage now where like we just want to focus on what got us here, which is focusing on users, the user experience, making it really awesome, making everything faster and cheaper and better. But also, like, we do think that crypto is kind of uniquely an American concept, and we're into this idea of like American dynamism through crypto, advancing and bolstering the power of the U.S. dollar through dollar-backed stablecoins. Like, this is actually, there are important things happening on the geopolitical stage now, and so we're having an event in New York this summer called Accelerate.
Accelerate.
Yeah, and it's gonna be incredible. A lot of U.S.-based crypto founders, people from broader tech, and some pretty groundbreaking announcements are gonna happen there.
Yeah, we're very excited. I think we already have our tickets for that. It's going to be amazing. We have a few questions. I think we've covered some of them casually throughout the conversation, but I think like one that I like is the last one, right? As a non-technical founder, blockchain developers, I have spoken with our 50-50 on using Ethereum versus Solana to build. Why choose Solana? What's the pitch now?
Yeah. So, it's really the same thing as like 7 years ago, which is Ethereum is scaling through basically sharding. There's a roll-up centric roadmap where you have many different networks that all settle back to Ethereum, and assets get split up between these networks. Users have to bridge between these networks. Developers have to choose which one they're going to launch on. And interoperability between all of those layer twos is not, it's just not achieved, and it's been years, and they've been working on it, and we've seen no results there. Solana was built from day one to scale as one single state machine, one network. So any user, any developer that builds on Solana or accesses assets on Solana or establishes a liquidity pool on Solana is tapping into the same liquidity, the same users, the same applications across the network globally. And that's always going to be the case. So for developers, for users, it's simplicity, but it's also a predictable path to scaling. If you have something like the president just launched a meme coin on Solana. It was $40 billion in trading volume in 24 hours, which is the highest for any crypto network in history. There were users just tapping to get to that asset generated 10 million transactions in a day, which is more than every other layer 2 combined has ever done. And the network just works, and we're still pushing to make it 1,000 times faster and cheaper and more scalable through things like FireDancer and other stuff that you can look up. But yeah, I think that's kind of the central question for a developer. Do you believe in the thing that has already been proven to work at the highest level of scale and throughput and be consumer grade? Or do you believe in the thing that's kind of working toward getting there but is older and more entrenched? If you go viral, like, do you want the thing to just work, or do you want it to tap into Ethereum liquidity? I think that's the decision in front of developers these days.
Yep. Can we get a refresh of questions just to see what else?
We can pick from these ones too. They're fine.
What's out there?
There's a lot of questions.
Yeah. There's a couple on quantum computing. I don't know if you want to touch on that.
Sure.
Like, no.
Yeah.
Does the Solana Foundation intend to disappear at some point? That can be a quick...
I mean, everything is temporary. One day the sun's going to burn out, and it's but yeah, I mean, I think the focus with the Solana Foundation is always whittling down to what is the essential thing that it absolutely must do that no one else can do. So the most recent examples that I can think of are like when Visa wanted to run stress tests on every crypto network and decide which one they're going to use to scale their bank and merchant and issuer settlement pilot to use USDC 24/7 and settle on blockchain rails. Like, they could just talk to anybody in the ecosystem, but it's just for a company like that, it helps to have an office where they come in and they speak to a team of engineers who have a viewpoint across everything built in the ecosystem, and they handhold them and make sure the diligence goes well. So there are relationships like that, and there's things like the foundation delegation program and coordinating for new builders that we're finding are pretty essential now, but I think in the next 5 years, 10 years, it's possible those things will be non-essential. And our bias is toward reducing over time, not increasing in headcount or scope.
Do you want to pick one of the other ones?
So what are your thoughts on Trump announcing Solana as part of a strategic reserve? I think that story has now evolved. The Bitcoin strategic reserve is the only one that was, I think, kind of hard and fast. And then the other assets, it's more about stockpiling. So if there are seizures of crypto assets, the government's not just going to sell them instantly. It's going to retain them in a stockpile. I think he mentioned Solana because it's like the biggest, it's one of the biggest networks. So I don't think there was anything special there. We didn't talk to them about that or pitch them on that.
Yeah. Do you want to do privacy, or do you want to do...
Take a pick. These are all great questions.
Memory lane again. Oh, Jesus.
How about, there's one about FTX and SBF.
Yeah.
What were the top things you did to manage the crisis at the time? I think the biggest issue at the time was
you were on a plane, right, on the way back?
On the way back from Breakpoint, our biggest conference that we throw every year, and we learned that FTX was collapsing. And I think the biggest concern was that there were so many startup teams who had raised funds and had all of their funds in FTX. So the first thing was, getting them bridge rounds, helping them just deal with the emotional impact of their runway being cut so much shorter. But actually, I can say this now. At the time, I felt like it was going to be really great for those teams, because if you remember us having only 9 months of runway and having to friggin' make it work, so many of these teams had gone from having like 36 months of runway to having 9 months of runway. And I was like, great, this is like your moment.
Congratulations.
What are you actually doing here? What can you prove in the next 9 months that shows that your product is valuable? Otherwise you were just going to have to wait 27 months to get to the same place and learn the same lesson. You've just accelerated your timeline. And Backpack and
Helios was there.
Helios, like so many of the great companies in Solana now, they found their value, they found their focus, they had their crucible moment in that time. At the time, nobody could really explain why I was smiling so much, but I'm not that prophetic, but I did at least see a mirror to us in our early days. That hard, low runway crisis moment is a lot of the time where a company's soul gets forged.
Well, I know that we're just running out of time.
Yeah.
We have a plane to catch. This has been amazing. I really enjoyed it. It feels like there's been a whole lifetime of events and really cool memories that the network and you guys have gone through. It's been an honor to talk through your story and have that part of the memory bank now forever. And so thank you, Raj.
Yeah, thanks
really
for having me.
appreciate it.
Thanks, everybody.
And welcome to Austin.